Okay, this is now an example. It's a simulation basically for trading with the ITM Financial SigAlert Indicator. It's the follow-up tutorial from the other one before. I need to make an important clarification again. The ITM SigAlert Indicator is not an expert advisor and worked with commodity channels along with other indicative logic. So therefore you can't run back tests on a momentum-based indicator like this. You absolutely must select an appropriate entry point to enter the market after reading the SigAlert indicator signals. So the ITM SigAlert indicator seems to be a very accurate trend prediction tool, as we can very clearly see on the charts. But there is more to trading than just one indicator, and the ITM SigAlert would never be used without looking at other factors in multiple time frames. So you have to take into account other factors before trading. An indicator that predicts just the trends, factors like other ITM signals indicators that will make your trader's life easier, or divergence on CCI, RSI at the current period, volume, etc. I'm repeating this just in case you haven't seen the video before. Okay, so as we said, the ITM SigAlert indicator is meant to be used as just that, an indicator. It is not a robot, not an expert advisor, not anything close to those things, and backtesting is completely incorrect. As it is a momentum-based indicator that works alongside other indicators in the code to predict the movements. So now let's look at the chart, and I will first explain the simulation scenario. So as we said, considering what I explained before, you should understand that this is not even a simulation, but just an illustration of how a trading period could have been if we operated by following only the ITM SigAlert indicator signals. So now let's get started. We are looking at an Euro-US dollar foreign exchange trading in a 30-minute time interval. As you can see, there were a few days, this was the February 14th to 17th, 2012, with quite some up and down movements here. Down and up again. Without being too volatile, and therefore a perfect scenario to illustrate how our ITM Financial Forex SigAlert indicator could be indicating trends. And for this simulation, as I said, I'm not taking into account any limits recommended that come together with the signal. I'm assuming we follow the straight rules, going long when the second green line confirms the signal. Here, the second green line. And I'm assuming we are selling as soon as the blue red line crosses below the 0 line and the second red vertical bar appears. So here we see the blue lines going down, the second red bar appears, and we are selling. So this is our trading scenario. Naturally, the same is true for the opposite, short trades. In this case, I assume that we have sold before. We immediately went short again and will buy going long as soon as the blue line crosses upwards again, the 0 line, and the second vertical green bar confirms the changing trend, which is now going upwards. These light gray arrows indicate the moment the trade enters, like in this, enters and exits. So I'm basically doing a double operation. I'm in this case I would be I would be going short. Sorry, I would be going long, and then immediately after that I would be going short again. So here are the simulated operations. As we can see, number 1, the signal is to go long, but the trend goes down. Our stop loss should have avoided major losses, but in any case, the trend forecast would have been wrong in this case. So now let's look at number 2. Number 2, we go short and arrive safely to 3 with quite a substantial winning. By the way, all the odd numbers are long and the even numbers are short trades. And if these arrows are green, it basically means we are winning money, and if they are red like there and there, basically means that they are losing. So these arrows don't indicate the direction, it just is win or loss. So green is winning and red is loss. But this trade, number 3 here, the long trend breaks very quickly. But our signal detects it rapidly and we go short again. And that's a very deep falling trend. And if we had if we had operated actively, we might have left the trend as soon as we noticed the turnaround. Remember that this is a simulation when we do not take other factors into account. Or maybe we would have set a limit before. In this case, our indicator reacted a little late, but we may have had a limit set before, as I said. In any case, we would still cash in as we go long now. So as we see here now, if we sold down here, that would be the ideal moment, but we can't foresee the future. So right now, as I said, we just follow the strict rules, as I said before. We went long here at the second bar and will sell, or in this case, go long again at this second bar. But we could have made much more benefits. But in any case, as we can see here, the green arrow still is fine, so we shouldn't be complaining. Now the 5th operation, not a big win, but our Forex indicator has clearly foreseen the upwards trend. And now it's indicating us in operation 6 that we have to go short again. And this is a large, deep falling period. Maybe the alert to go long again could have come a little earlier, but this time we are still on time to get a big piece of the cake. So as we see here, we entered here, and this is where the second bar appeared, and we exit again. So the ideal moment would have been here, but that's not, if we knew this, it would be wonderful. So the last one, the last signal is to go long. Looked good, but turned around quickly, as we can see here, and very abruptly, and the signal to sell comes pretty late. But again, we don't lose too much, and a correctly set stop loss would have made it almost painless. In summary, in this simulation, if we want to call it a simulation, it's really, as I said, an illustration, would have made quite some benefits, even without taking into consideration other variables and factors. And although the ITM Financial SigAlert is not perfect, who said it was, the predictions would have been above the claimed 67% and 60 to 70% and quite accurate. So this seems to be too nice to be true. Can it really be that simple and easy? I must insist, no, it isn't. As we mentioned before, you have to factor in more variables before you trade. But on the other side, if those other factors support the ITM financial SigAlert signal we get, then we are on a pretty sure path. And remember to set your stop loss. Nobody is perfect. Bye. How to use the ITM Financial SigAlert Indicator. So once you've imported the ITM Financial SigAlert Indicator, you follow this powerful strategy step by step in order to secure a profit on practically every trade you place on the market. But before we move on, let me remind you an important concept. The ITM SigAlert Indicator is meant to be used as just that, a momentum-based indicator. It is not a robot or an expert advisor. You have to take other factors into account before trading an indicator that predicts just trends. Factors like other ITM signals and indicators that will make your trader's life easier, or the divergence on CCI, RSI at the current period, volume, etc. So now let's take a look at the chart. On the top of the chart, we can see here the normal candlesticks, and I've drawn some arrows here. So the red arrows indicate where you would set your stop loss, and the orange arrow here, the target, basically the limit that comes with the signal and indicate where to set your winning limit. And then finally, the yellow arrows represent the time, or say the benefits, let's say the difference between the entry and the exit price. So in this case, we've went long, so this would be the benefit between the entry price and the limit price we set. And here, as we go short, we also have benefits as we can see here. So now let's go to the bottom half of the chart that shows the ITM Financial SigAlert Indicator in action. So you can see here, if you look here, this is you can see which indicator we're looking at. And as you can see, there would have been two main opportunities to place your order. A, you could have bought going long at the beginning of the chart here, or follow the indication on the falling price and sell going short on the second arrow. So the basic strategy is you open your position when the second red or green vertical bar appears in the ITM Financial SigAlert window below in the chart. So here, where the big arrow is pointing to, this is the point where we would enter, or here we could enter here if we were going short. You can technically enter a trade on the first green or red bar. The only downside of doing this is that your position will not really be confirmed, as there could be pullback and or reversal. So waiting for a second bar ensures that your intended trading position is indeed valid and you are safe to go ahead and open the position live. So the second step is you would place your stop loss 2 to 3 pips below when going long, or through 2 to 3 pips above when going short of the previous candle, assuming that you're using candle charts. So in this case, for example, there's an error here where we have the stop loss, and here is the other stop loss if we went short. Okay, so to give an example, if you buy at 1,000 at 1.4000 going long. The previous candle low was 1.3990. So you would therefore set your stop loss just 2 to 3 pips below, which would be 1.3988. The next step is to limit your benefits. And this is optional, but I would do it. So each signal comes with a target price. See the orange arrows as I've drawn them here and here. And set your limit to this target price. Additionally, as the movement goes into the right direction, adjust your stop loss to ensure benefits already achieved. It's now up to you to relax and wait to hit the limit price and cash in your benefits, or continue adjusting to squeeze the maximum out of the trend. I've learned my lesson. Remember, I lost more than $50,000 in just a few minutes, and therefore prefer a more conservative approach. Cash in and take a new chance when the next signal arrives. And if you want to go short, you'll be basically doing the exact opposite. So, according to several thousands of tests the ITM financial team have performed, by opening even a lot of them live positions on the market, this strategy works extremely well on the 15-minute M15 to 4-hourly 4H time frames. The ITM financial team has tested it on several major foreign exchange pairs and have received the best results on the most traded ones like the euro and US dollar, the British pound and US dollar, the US dollar and the Japanese yen, etc. So I hope this was a short introduction in just one example of one of the signal indicators that you would get from ITM Financial.